Hi, hello, namaste, hearty welcome to iLead Tax Talks. It's such a joy to see you all once again after a busy tax season. The tax season just went by, and now I see a lot of clients coming to us for tax planning. And as I have been always telling, stop filing your taxes just yearly, but start planning your taxes every month. I always tell my clients, review your iLead. You really don't need, an accountant to do that. iLead. I for incomes, L for liabilities, E for expenses, A for assets, and D for your dreams. You got to review your iLead. If you're a married person, you got to sit with your spouse and then decide how much income have you made, what are our loans, what are our liabilities, what are our expenses, what are our assets, our investments, and what are our dreams. What do we want to do? Is there a medical emergency, any home, any holiday destination, any business? What is it that we want to do? So you have to review your iLead. As part of reviewing this iLead today, I wanted to talk to you about pre-tax contributions from your W-2. So iLead also has another sister concern, iLead Tax Planners LLC. So here the focus is purely on planning. It's only for those people, those clients, those taxpayers. We sweetly call them as zimmedar, the responsible taxpayers. They take responsibility for their finances, they take responsibility for their business, for their profession, for their wealth, and for everything. You work so hard to make money. Why not channelize those taxes properly so that it can get you wealth? Yeah, fine. So today we will talk about pre-tax contributions from your W-2 income. You might be listening to this. You can listen to this even when you're walking, when you're driving, you're sipping your tea in your break time, or with your family member. I encourage you not to miss these iLead tax talks. I'll try my best, to complete in 10-15 minutes so that, whenever possible, I can come up with tax talks like this. Now, before we get into this, we need to understand what is pre-tax and what is post-tax. Why do we call it as pre-tax? See, the difference between pre-tax and post-tax contributions comes down to when you pay the tax on the money. See, when it comes to pre-tax contribution, as you see, pre-tax contribution, money is taken from your paycheck before the federal taxes are withheld. यानी pre-tax, यानी before. So it will reduce your taxable income now. And some of the popular, pre-tax contributions we will discuss in a while from now. Now, when it comes to post-tax contributions, we will take another session on what are post-tax contributions. But pre-tax contributions are something which you do it with your employer before taxes are withheld. You're reporting your employer. Okay. Whereas post-tax contribution is money is taken from your paycheck after taxes have been applied. So this does not reduce your current taxable income. Now, see, in a way, if we have to put it the way things work in India, let's say PF in India, employer contributes, employee contributes, and that is a pre-tax contribution. But if you are investing money in LIC in India, it is a post-tax contribution. Just for you to understand the concept clearly, I've just listed those things. So pre-tax and then post-tax. It's always beneficial that you first give preference to pre-tax contributions. Okay. Now, here today we are going to study a little about pre-tax contributions. Few pre-tax contributions which I wanted to tell you. Now, the first one being 401k, 403b, and then 457 plans. Okay. Now, all these are like pre-tax retirement saving plans. Now, what are these? Let's take a look at 401k. It is for employees of private sector companies, and for 2025, the maximum amount that you can contribute to a 401k is $23,500. And in case you are 50 plus, there is additional catch-up contribution that you can make, that is 7,500. So overall you can make $31,000 if you are age 50 plus. And here, when you are doing a 401k, there are two types of 401k that you can do. One is a traditional, again, that is a pre-tax 401k contribution wherein the taxes are deferred. And then you have Roth 401k, Roth 401k, wherein the contributions are made after tax. After tax. In the first case, the traditional 401k, the taxes are deferred. But in the second one, Roth 401k, there's no tax benefit as such, but you can make tax-free withdrawals at the time of retirement. Because the traditional 401k is given as a deduction for you now, the distributions will be taxable at the end. Whereas Roth 401k, it offers you no deduction at the moment, and at the same time, the distributions are also not taxable at the end. And the beauty is the employer has to match the contribution. Of course, they may levy some restrictions as to how much percentage they may want to contribute, but the employer matching contribution is there, which is otherwise not available in the post tax contributions. And in case you choose to withdraw the funds in this 401k at any time, before you're 59 and a half years of age, then there is a 10% early withdrawal penalty that is applicable. So in case you withdraw beforehand, then regular tax plus 10% additional tax will be applicable. Now coming to 403b, this is for those who are employees of public schools, non-profit organizations, and then religious organizations. So this is not for regular IT employees. It is not for those private sector employees. It is for people who are employed in public schools, non-profit organizations, and then religious organization. Works very similar to 401k contribution. And in 403b, the catch-up contribution can be made only if the person has been employed in that particular organization, let's say public school, or non-profit organization or religious organization, for 15 plus years. Okay, and there are annuity investment options also in this. Now finally coming to 457b, what is this? This is for employees of state and local governments and some non-profit organizations. Now here also the limit is just like 401k, same 23,500 per annum and 7,500 catch-up contribution if the age of the contributor, let's say the taxpayer, is 50 plus. And the unique feature of this 457b plan is that because it is for the employees of state and local governments, there is no 10% early withdrawal penalty. No 10% early withdrawal penalty. Even if you take money out before age 59 and a half years, there's no 10% early withdrawal penalty. Okay, and you can contribute to 401k and 457b simultaneously and doubling, the contribution limits. So unlike, the regular law that goes, that the sum of investment in both these accounts, should not exceed a particular limit. In case, somebody is a state and local government employee, they can contribute to both 401k and then 457b simultaneously. Okay, if you need more information on that, please write to me, asknanda@ileadtax.com. Now, the next one you see is flexible spending account, okay, popularly known as FSA. Now, here the contributions are again pre-tax, and they will reduce your federal income tax, they will reduce your social security taxes, they will also reduce your Medicare taxes. So on your box W-2, when you say box 1, box 3 and box 5, all the three boxes get reduced with FSA. So in case you earn like $75,000, let's say, and you contribute some $3,000 to FSA, you're only taxed on 72,000. 72,000. Okay. So maybe approximately you may save $700 in taxes depending on your tax bracket. And popularly, there are three types of FSA for your information. One is a healthcare FSA. Healthcare FSA. So it is used for medical, dental, and vision expenses not covered by insurance. Uh, Examples could be like copays, prescriptions, eyeglasses, dental work, and all. And for 2025, the contribution limit is max is $3,200. The amounts will keep changing every year. So, in case you are watching this, at a later year, please check with us. You can also WhatsApp us on +1 2 3 4 4 4 5 3 2 3, so that how much is the current FSA limit. And funds are like use it or lose it. So in case you're contributing to FSA and you have not used the funds by the year end, then the employer can always forfeit that. Employer may allow a $640 carryover, or he may offer a 2.5 month grace period. So usually the pass through entities grace period until March 15th. So that's the only maximum limit that you will have to use the funds in FSA for the designated purposes. The second type of FSA is dependent care FSA. So it is used for child care or adult dependent care, and mostly it covers like daycare expenses, after school programs, elder care, etc. And for 2025, the contribution limit is $5,000 per household. In case you are using a married filing separately as a filing status, then it will be reduced to half of it, only $2,500. And this also works on the funda of like use it or lose it. So if you're not using it by the stipulated deadline, it will be again forfeited. And then the last one is limited purpose FSA. Now, this is for people who have a HSA and can be used only for dental and vision expenses. Okay. Now, the third one, let's get into the third one. Okay. HSA, health savings account. Okay. It's a tax advantaged savings account. Um designed to help people with high deductible health plans save for qualified medical expenses. So it's only for people who have a HDHP, popularly known as HDHP, and it is to be used only for qualified medical expenses. And the beauty is that you can carry forward that. And the key benefits, three key benefits of this is that the first thing is that it reduces your taxable income. It reduces your taxable income. You will save on your federal taxes, you will save on your social security taxes, you will save on your Medicare taxes also. Okay, that's the first thing. It's a pre-tax contribution, reducing your taxable income. The second one is it offers tax-free growth. It means the earnings from this HSA in terms of interest or investments through it grow tax free. And then the last one is tax-free withdrawals. So in case you are using the funds, the amount in the HSA for qualified medical expense purposes, they will never be taxed. You can always withdraw them tax-free in case you are using it, for those purposes only. And for 2025, if you are taking a self coverage, a personal coverage or individual coverage, the limit is $4,300. And in case you are 55 plus, then you can add $1,000 more. So totally $5,300 if you are doing a self coverage. And then in case you are taking a family coverage, then it will be $8,550 per annum. And for each of the spouse, in case they are 55 years or more, you can add $1,000 for each spouse. And you can use the funds in HSA for like doctor visits, prescriptions, dental and vision care, therapy, over the counter medicines, menstrual products, and things like that. And at age 65 plus, you can use HSA funds for any purpose. Even non-medical uses are taxed like an IRA, and there is no penalty. And that is only at age 65 plus. So that's a retirement bonus that is offered. And the unused money always often is rolled over indefinitely, and it's a wonderful retirement savings tool. Now then, finally, we talk about group term life insurance here. It's a common benefit offered by many employers to provide life insurance coverage at little or no cost to the employee. Now, few advantages, of the GTLI is that it offers free or low cost coverage. Free or low cost coverage. So, employers often cover the first $50,000 of GTLI at no cost. And it's a great way to get basic life insurance protection without paying premium. So rather than taking your own life insurance, this can definitely serve the purpose of basic thing. And then no medical exam usually, like uh, even if you have any health issues, it's not necessary that you must go for a medical examination and then things like that. And this is again a pre-tax contribution, so it can be deducted straight from your paycheck. So no much hassle on this. So the first 50,000 goes tax free, and anything in excess of that, you know it is added to your taxable income. That's all. So all these four things, it forms part of pre-tax contributions. I'm sure there is more. When you schedule a call with me or my team, we can talk more about this, and then we can get more information also. When you're looking at your W-2 boxes, W-2, you can take a copy of your recent W-2 and start checking that box 1, box 3, box 5. So you can see the impact of 401k contributions there. Talk to us so that we can plan your taxes better, especially if you're somebody who has paid estimated tax penalty, or if you have been in a tax due situation. I very strongly recommend that you talk to your accountant wherever you file from. I'm not saying iLead alone. Talk to your CPA. See, anybody can file the tax return. Even software can file the tax return. But to do planning, you need to speak to an expert who is an enrolled agent or a licensed CPA. So uh, don't be a miser there. Don't be a miser there. I keep telling my clients that today your good friends are your tax accountants, your lawyers, your doctors, your fitness coaches, and then your spiritual mentors. So if there is a premium that is involved, always make an effort to talk to them. Now, just a quick example here. Suppose your gross salary is like 100,000, and you contributed like 23,500 to 401k, 3,200 to FSA, and then HSA 4,000. So that combined pre-tax contribution is deducted, and your taxable wages will be reduced to $69,300 only. Getting it? So like almost like $30,000 have been reduced. So let's say you fall into 22% tax bracket, just assuming so, or 10%, for ease of math, 10% tax bracket. So like straight 10,000, I mean straight $3,000 is reduced from your income. Getting it? So multiply the amount of pre-tax contributions by your tax rate that you're falling into, and that's how you end up saving your taxes. This was something just a refresher for you. I'm sure you will have many other tax elements to discuss. So if you have any questions on your personal tax, business tax, bookkeeping, payroll, or tax audits, please do write to me, ask Nanda at iLeadTax.com, and my team will be more than happy to schedule a Zoom call with you, and we will plan your 2025 better. Right? If you found this video interesting, please do like, share, comment, and please share it with at least 3 friends so that they know that they should not just focus on filing their tax returns annually, but also start planning their taxes monthly, quarterly, or periodically. Anytime they are making an important financial decision, it is important that you talk to your accountant. Okay, so we are always at your service in case you need any assistance on any tax matter and in reviewing your iLead. Please feel free to contact us. Have a wonderful day. Thank you. Bye bye.